All right. Hello everyone. My name is Joseph Malafe, with HC CPAs. So today we're going to talk about counting methods and Form 3115. So why would you make an accounting method change? Accounting methods are used to help taxpayers correct improper methods and to maintain tax compliance or eliminate audit risk. As a tax planning tool, depreciation and amortization are used due to the matching principle, uh, which as, which matches up an asset with its useful life. So assets are depreciated over a period of time to match the usefulness of the asset. So even if you pay for the asset in 1 year, you're going to use it over a period of years. So you would want to match the usefulness of the asset over the period of years that you're going to use it, even though you paid for it in one specific year. All right. So Form 3115 is used as an application for a change in accounting method. So this form is used to inform the IRS about any changes in accounting practices that might affect the timing of income or expenses recognition. For example, you can change from the cash method to the accrual method, or you can correct and overlook depreciation. So that's what we're going to focus on for today, overlook depreciation. So when does this apply? For any rental property that you have, depreciation should be taken. So one of the main reasons to take depreciation is that when you sell the property, there's a recapture of the depreciation. And even if you don't take the depreciation, the recapture is still mandatory when a property is sold. The recapture is about 25% of the depreciation. So you have to pay that back. So your best bet is to take it while you have the property in use as a rent. When depreciation is not taken for 2 years, 2 straight years, then the IRS automatically triggers a change in accounting principle. So on the third year that the depreciation is missed, then you're able to fill out the form 3115 and and recapture the previous depreciation that was missed for the prior 2 years. So a little bit more about depreciation. For residential rental properties, depreciation is depreciated over 27 and a half years. For commercial real estate, it's over 39 years. The IRS allows non-building components, such as personal property and land improvements, to be also depreciated over time. So usually it's about 5, 7, or 15 years. So if you have to replace your roof, if you have any improvements to the property, you're allowed to depreciate that as well, not just the property itself. So those type of improvements will be taken over 5 years, 7 years, or 15 years. On the so these are also examples of something that can be taken as depreciation, and you can also add that to the through Form 3115. So filling out the form 3115, it's about 8 pages. It has right now we're going to focus on depreciation, but there's other parts of it that can be filled out. There's different codes. For example, it's a DNC, designated change number. In our example, the designated change number is 7 that we're going to use for depreciation. So the directions, schedule for depreciation on the rental property is going to be taken on Schedule E. So the change in depreciation or amortization, all applicants requesting to change their accounting method for depreciation or amortization must complete Schedule E and Form 3115. You have to attach a statement describing the property subject to the change. So you include the description, the type of property, the year it was placed into service, the use of the applicant's trade or business. Um, Also include the type of include any amount of tax credit claimed, subsidy or grant received, along with any necessary adjustments to the basis under the code. The statement should include a description of the incentive received with respect to the property subject to the change. Include whether the type of incentive is a tax credit, grant, or other incentive, or was funded by the federal or state local government. So we're going to look at an example. So this is an example of a person that has a rental real estate, residential. So they this is the Schedule E, which part of the 1040. So you see the rents received. They have some expenses, insurance, management fees, but the depreciation section is blank. So they did not take the depreciation. So their total income is 20,244. So they're gonna pay tax on that additional money. Uh, so they're missing out on the depreciation expense that they're entitled to. So so we're gonna fill out the form 3115 for them to have them be able to claim that previously depreciation that they previously did not take. So this is the form here. So I left the name and address blank, but we have the principal business activity, uh, tax year that you want to change to begin. And if you want to receive a copy, you can click yes there. So this is an individual, and they're going to be uh, having the depreciation recaptured. So we continue. There's a few more questions that you have to fill out. Does the applicant have any, it could be a little bit confusing. So you can you can contact us for us to fill it out for you. So here we have, does the applicant have any federal income tax returns under examination? So in this case, there's no tax returns that are, so like if you receive, for example, if you received an audit letter, um, your tax return would be under examination. In this case, we're just doing it to take the depreciation that we did not, that we're entitled to, that we did not previously take. But then 7, is there any audit? Is there an audit going on? So no. Was the applicant due to was the application being filled out due to any appeal? No as well. Is this an S corp? No. Is this any related party? That's no. So we continue. So you also have to go back and check your previous tax returns to see how much the total income related to the accounting change. So we have the total income for the previous years here. And here is where you have the adjustment. So for this example, we're going to go with a cost basis of each property of 200,000. And we're going to say that the properties were placed into service January 1st of 2021. So we have a $200,000 for 3 different properties, and we're going to divide that by 27.5 years, which is the which will give you the amount of depreciation that's allowed per year. So for this, we'll have 7,272. So we're going to times that by 3 properties for 2 years, and that's how we get our adjustment here. So once we have that adjustment placed in, it's about 14,500 and 45 for each of the three properties. So we go from having to pay taxes to on the rental properties to having a loss for the year because we were able to take the previous depreciation that was not claimed. So that allows us to no longer have so these losses will get carried forward to the following year. But we were able to eliminate the tax due in relation to the rental properties to making that adjustment. So that is the form 3115 and the change in accounting principle. Does anyone have any questions related to that?
Joseph, are you saying that for this, say, client, for the last 2 or 3 years, we missed the depreciation? We basically now add all of them together and put on this year's tax return.
Right. So you take so as long as you missed it for 2 years in a row, then you're able to take it in the as long you fill out the form, you're able to take that in the current year.
How about 3 years?
Well, yeah, it has to be at least 2 years. So you can take so if it's 10 years, you can take 10 years in 1 year.
Okay.
That's 10 years,
So
yeah.
if we have a cost segregation and then now we can do the cost segregation and start from this year and take the whole thing together. So the whole, like, you know, the bonus depreciation this year. Or
Mhm.
we do a cost segregation starting from the year that the property is placed in service, let's say 3 years ago. Then we have a choice of whether go back to amend the tax return for the last 3 years, or we can fill this form 3115 and then just take it from this year, right?
Right, yeah. So if you want to amend it, you can go back and amend it. So yeah, you have the option of amending up to 3 years if you want to go back and amend it as well.
So if we don't go back to amend, we can just take it to say, hey, we start from this year, and then we don't need to fill the forms 3115.
If you sorry, so you said if you don't want to amend it, yeah, if you don't want to amend it, you can. I think what I was reading after 2 years, because the IRS showed that you involuntarily decided to not to take the depreciation, so they'll have it in their system as that you're choosing not to take depreciation. So by the third year, if you don't take it by the third year, then you're supposed to file the form to adjust, because if you start taking it in the third year, your cost basis for the properties will be incorrect. So you're correcting the basis of the property.
I think a cost segregation, I think the rule is they will ask you the year you placed in service, and then they start the cost segregation from that year. And then, so if we don't want to go back and amend the tax return, we must file 3115 and then take it from this year forward.
Right, exactly. Yeah, you take it from this year forward. Yeah.
Okay. And that's probably the easiest one.
Yeah.
Okay, rather than going back and amend the tax return.
Mhm.
Okay, so that's where the 3115 comes in for the
Yeah.
cost segregation. So besides depreciation, what else do we use the forms 3115?
So besides depreciation, the most common ones is change in the accounting principle. So if you want to go from the cash basis to the accrual basis, will be the other main one that is used for.
So every time we change from cash basis to accrual basis or vice versa, we needed to file the form 3115.
Yes. And then the other one that you can, if you want to make the election to be a day trader, you can also use the 3115 to make that election as well.
Okay. And then is there a limit on within how many years you can make a change?
I didn't see any limit, but it did say the IRS, it said the average is 5 years. So if you change it, the IRS they don't have a specific limit, but they wouldn't want you to change it more than every 5 years.
Okay, thank you.
Joseph, I have a question. For the 3115, for this change, is this one form for multiple properties or is it one form per property? If we have multiple properties, how many forms do we need to file?
Yes, per taxpayer. So you can file one form. If the taxpayer has multiple properties, you can file just one form for it's per taxpayer.
So we can aggregate several properties depreciation together.
Right, yeah. As long as it's the same taxpayer, then you can you just file one form for the taxpayer.
Thank you.
For it, and you can also use it for like S corps or so just one per so one form per taxpayer.
Do you need to file this form manually, mail to somewhere? Or can you
So you can mail it or fax it to the IRS.
attach as a
Right, and
PDF
then
document to your tax return?
right, yeah. You also add the attachment to your tax return as well.
If I e-file, can I just attach it to?
Yeah, I saw in the in the I think from 22 on the tax software you can attach it. You can e-file it and attach it. I mean the directions, so yeah, you can mail or fax a separate copy, but then you can also attach a copy with your e-file as well.
So I guess to be safe, you want to mail a copy and then attach on the
Then
e-file.
attach to the right, yeah. So you should do both just to be safe.
Thank you. So I guess the purpose of this form is to more or less kind of correcting mistakes or changing accounting method. Now, just from a tax planning perspective, can we also think creatively, how to use this, take advantage of this change of accounting firm in, different situations that will be advantageous to our client?
Yeah, so the if you project that in 3 years that you'll have a big spike in income for a rental, then you can not take the depreciation for a couple years and then have it and then take it all in 1 year. So that's one way you can use it advantageously if you're able to predict that you'll have that a big spike in rental income in 3 years. Or I was reading, you can also just not take the depreciation at all, then you can take, then when you sell the property, you can take the depreciation in that year as well, if to offset some of the capital gains. So that's another option that you have if.
So I could purposely plan this way.
Right. Yeah, I was looking to see because if you can purpose, as long as you don't take the depreciation, then you can, and you file the 3115, you can purposely plan to not take it and then strategically take it, in all in 1 year.
You don't even need an excuse. Say, "Oops, I forgot."
Right. There's no, they won't question you, why you didn't take it. They just, as long as you file the form, then you can go ahead and take it in all in 1 year.
Okay. Now, that's interesting. That opens a lot of opportunity. Now,
Yeah.
did you say that even you don't take the depreciation over the years when you sell the property, you still have to recap the
You have to
depreciation?
recapture. Yes, you still have to recapture it even if you don't take it. Yes, that's correct.
So you leave recapped as if you have taken at least at the straight line 29 years.
Yes.
Really?
Yeah. So it's the if you don't take it, they'll recapture on whatever's allowable. So whatever is allowable, even if you don't take. But I know sometimes if you have a loss, then depreciation doesn't help you. But you still have to you still have to pay the recapture whenever you sell the property.
Wow.
Joseph, one question I saw in ProConnect, actually there is a place for this form 3115. So when we do that, the current year, like just last year's tax return, can we
Mhm.
use this form to recapture the missing previous year's depreciation? Do we need to do anything additional than this form in the
Yeah, so you can fill out this form and then in the ProConnect you can also fill it out and have it attached, but you'll also separately fill it out and send it to the IRS. So you fill it out in the tax return and then also fill out a separate one where you can mail or fax it to the IRS.
Okay. So I have another question, kind of related as when either individual or a property management LLC manages several properties and depreciation, and once they review it and they look at whether it's active or passive activity. So when it's reviewed as passive, some of those either loss or whatever, and they consider as suspended loss. So how does that work? And will the suspended loss be carried over for the following year to offset the revenue?
Yeah, so if it's a passive, if you're not actively managing, well, rental income is normally considered passive unless you're like a real estate agent. So any losses will then get carried forward to the next year. So to be suspend you're not able to take the loss against your active like W-2 income, because it's deemed a passive activity. So it'll then get carried forward to the following tax year.
So with the depreciation, because that may just make the expenses higher than revenue in general. So you have this ongoing suspended loss if the whole real estate management as passive activity. Is that correct?
Right, yeah. So if your depreciation can't take you to a negative, so it'll then get carried over forward to the following year.
So if a taxpayer has a property management LLC, would that be counted as active activity
Oh
or
no,
still?
if you have an LLC, then it'll go on Schedule C, so then that can be considered active if it's under an LLC.
So if I have a lot of deduction and if I use all the loss to even offset all my active income, the extra loss can I carry forward to use it next year to offset other income?
So if it's if it's an under Schedule E, it's gonna be carried forward. But if you have it under Schedule C, if you have an LLC, if you put it under an LLC, then you can have it offset your other active income.
Yeah, what if I still have extra loss after offsetting my this year's income? Can I carry forward?
You have to double check. I'm not 100%. If it's I think Schedule C losses don't get carried forward, but
I'm
and if
thinking
it's
from
Mhm.
yeah, double check. I'm thinking, from the theory of net operation loss carry forward, right? You can carry back 2 years and carry forward. I think
Oh,
it can.
okay. Yeah, if you put it as I think so. Yeah, if you put it as a net operating loss, then
So if we consider it as net operation loss, then we can carry forward.
check for it, right?
I can, strategically use this loss for this year. Not even, I don't even need to offset all my income. All I need is offset enough income, right?
Right.
Or, even I pay a little bit tax, reduce my tax rate, and then still save some loss to use it in future years, right?
Right. Mhm.
Yeah, double check if that's that's a way that will work, then it opens another planning avenue. I think in theory it works.
Yeah, it's for the net operating loss. Yeah, this
If we
I'll double
consider,
check.
if it's a business, right? It's an LLC, it's net operation loss.
Right.
Yeah. I know in C Corp, there's a line net operation loss and it carries forward every year. But I
Yeah.
think in LLC or Schedule C, I think we can just put somewhere in a memo, right? Maybe in a line item somewhere as net operation loss, keep track of it and then use it next year. And then next year in the expense section, we can just call net operation loss carry forward from last year.
Gotcha.
Okay? So I think we can do that. Or even, we can just track it in an Excel sheet. And then we can use that loss, harvest that loss year by year.
Any additional questions?
Thank you so much. Very informative. Really appreciate it.
You're welcome.